What is up, y'all? Welcome back to another episode of the Easy Button Real Estate Podcast. Today is a solo show diving into some of the stuff going on right now across the country in real estate. And I give you guys some updates on what I think are things you should be focusing on right now and in the new year. I actually made a thread about that on Twitter to start the week that I think you guys should all go read as well. This is not the only place I put out content. If you do watch the show, digging into other platforms to put out content as well, highly recommend it. YouTube and Twitter and Instagram and TikTok, anywhere you consume content. We put out some good stuff most days, definitely every week. So definitely recommend spending some time across all the platforms where we create and facilitate content. Today's show, you guys, we're going to get into a bit of what's going on here at the Easy Button with me, and we will talk about some of the stuff going on around the country, and then we will get into the general show, what I'm going to talk about today, which is a couple concepts that I think will help you all do more deals here in 2026. We're going to talk about the return on brain damage, one of my favorite terms. We're going to talk about, focus. I actually had a call today with a client who's a great flipper and investor out in Wisconsin, and talk to him about what that means going into the new year, understanding what business you're actually in, risk tolerance, and a few other fun conversations that we'll have today. So without further ado, let's get right into the show. Well, if you guys are frequent listeners of the show, which it grew tremendously in 2025, we appreciate you. One of the things that we've done differently with the show is just give you guys straight, direct 20, 30-minute episodes. We're not trying to do the normal round robin and go and interview all the biggest real estate people. Our goal is to put this in front of real operators that are doing real deals, making things happen. And the last show of 2025 was a great one, kind of outlooking on 2026. Some updates for you guys. First off, if you guys haven't already delved into this, in the show notes today, you will see our link to our winter summit. Because you guys are listeners, you're going to get a code. That code is WNTR, all caps WNTR. 1,000. That's going to give you $1,000 off to come to our winter summit in Park City, February 5th through 8th. And we will be there with 10 people from our team. So far, about 20 of our clients and some non-clients that are all crushing high-level operators. We'll do 3 days of skiing and masterminding dinners. They're a ton of fun. We've done them 2 years in a row. This will be our third year, and I can't wait to see you all in Park City, February 5th through 8th. Beyond that, you guys at Easy Button, we're really focused in 2026 on being an elite operator and helping people become elite operators. That's where the real money's made. You can make money hustling. You can make money doing a few deals a quarter, a few deals a year. But the real money is made becoming a great operator. That's not sexy. It's not as exciting. It's not as fun as changing asset classes, changing exit strategies, chasing the biggest deals that are out there. But it's what gets you paid. And I'm going to talk about a few concepts today on today's show. They're going to help you get paid more frequently. First one's return on brain damage. And if you guys are, experienced vets of the show, so to speak, you listen to Tucker and I weekly, you've listened to the client case study podcasts, whatever it may be, you've heard us talk a lot about return on brain damage. In my opinion, real estate is a brain damaging way to make your active income. Any business is a brain damaging way to make your active income. All of us are doing things we hate every day. But real estate especially, it's high transaction volume. It's fixed expenses, but variable income, right? You don't have recurring income, but you do have recurring expenses, most of us. Software, office, team, salary, and that creates brain damage. And so I want you guys to all focus. What I really am, imploring our clients to do this year is not to chase transaction volume, not to chase deals just to do deals, and not to chase vanity metrics, right? Don't chase unit count, don't chase cash flow. These are the things that burn people out. Chasing vanity metrics, chasing unit count, chasing, on paper cash flow, chasing deal volume, anything that's kind of shiny and sexy on Instagram tends to be what burns people out actually in the real world. So I don't want you guys chasing volume. I don't want you guys chasing vanity metrics. I want you guys chasing and maximizing your take-home profit with as few transactions as possible. That's what you should put on your desk in front of you every day. How do I maximize and scale my profit? Everyone talks about scaling, right? They want to scale. They want to do more deals. They want to make more money, which is great. I think everyone should scale. But what you want to scale isn't, vanity metrics, isn't overhead, isn't chaos. You want to scale profit. And to scale profit, sometimes you have to do those things. But, an example I gave on Twitter this week is, if you're wholesaling deals in Arkansas for $10,000 a pop, that's a very high brain damage, high transaction volume, and high paying business that I wouldn't want. I don't want to have to do, if you want to do $300,000 a month, you want to do $200,000 a month, you're going to have to do 20, 30 transactions a month. And you're going to have a lot of fixed expenses to move that many deals. So I want you guys all to think about what you're building and how to maximize profit without necessarily scaling all the brain damage and chaos that comes with that when you do it the wrong way. So I don't think, and I don't want to encourage you, I don't think how many people you can employ is a flex. I don't think your office is a flex. I don't think how many rentals you own is a flex. I think simplicity and focus. Like if I met you at a mastermind, let's say you came to our winter summit and I met you and we sat down and we talked about your business, what was going on, and two of you guys came to me, I'd be much more impressed by the person that was like, hey Cole, I do 3 deals a month. I wholesale 2 of those deals. I buy one of those flips, the highest profit one I buy. Or, hey, I do, I buy 1 development deal every quarter and I do 3 wholesale deals a month. I take home $700,000 a year. That's much more impressive to me than, hey, I have this big office. I have 4 sales guys. I spend $50,000 a month on marketing. We do $3 million a year in top line and I take home $400,000, right? Because if the game we're playing, no one's coming to buy your real estate business. Anytime you see someone talk about selling their real estate business, maybe they sell the brand, maybe they sell some internal team members and infrastructure, but they're not getting a multiple. Like it doesn't happen in the way that you think it does in real estate. So you're chasing profit. You're chasing maximizing your take home. That's all that matters. And with that, like a lot of you guys have partners or exploring partnerships. And it's a dangerous game because you have to do so much more volume to make your profit and it complicates it. I think if you have a partner, you guys would be better off each running your own operation and sharing ideas and collaborating than you would be running it together. One, there's not enough to do. Like if you're being honest with yourself, a real estate company doesn't need 2 owners. And the sweet spot to me, like if you're a single operator, you can get your top line revenue to $1.5 million, $2 million a year and your real estate business. I know you're going to put, $500,000 to $1 million in your pocket. That's still a pretty low brain damage business. And then when you're putting that kind of free cash flow into your pocket, it feels better. You enjoy the business more. You can then actually go buy rentals. You can then actually grow your income and your career and your wealth. Example of that is if you guys haven't gone listen to the show I did with Brandon Evans earlier in 2025, his first full year in the business, Easy Button's been his backbone and what he's built on. Almost $500,000 in net profit, take-home profit, added a bunch to his portfolio, including a great triplex of about $500,000 in equity. That's an example of a business you guys want. And if you want to go big and go balls to the wall and have the big office, have the big team, great. But you have to go really big, right? You can't get stuck in the middle, right? The middle is where real estate businesses go to die. You've either got to be small and lean, 0 to 500 to 1.5 a year, or you got to be big, 5 million plus. But being in the middle between those two is just a recipe for chaos, brain damage, and not a lot of profit that returns to you at the end of all of it. Second point today, you guys, is singular focus. And my question I asked on Twitter that I'll ask you, I'll ask you guys if they're listening is, have you ever met the guy launching 4 marketing channels at once? Have you ever met the guy that's a agent, developer, flipper, wholesaler, Section 8 expert, and Airbnb mastermind? They don't win, at least in the way that you want to. They chase novelty. They chase that new sexy feeling. They chase telling their friends and family over again that they're this badass operator. That's not who you want to be. You want to be the guy that masters a marketing channel, an asset class, an exit strategy in an area, and then expands, right? And you'd be surprised if you really did that. If you really got one marketing channel to 3, 4, 5 extra on ad spend consistently, you really mastered single family or duplexes or fourplexes or new development. You really mastered an exit strategy, flipping, wholesaling, developing, and you mastered a county or 2. You would enjoy your business and you make more money. Like I can pretty much guarantee you that. And then expand. But a lot of people that you're trying to solve for $10 million a year business problems when your business is a couple $100,000 a year, right? Your constraint isn't that. And you got to solve problems that are actually in front of you, not theoretical problems you heard on a podcast or so on Instagram from a guru. You got to solve, the actual problems in your business. Everyone asks me like, why don't I read a ton? Why aren't I listening to a ton of podcasts? Why aren't I going to a ton of events? Because I solve the problem I actually have in my business right now. And I pay for that. I have business coaches, pay for books, pay for masterminds, but I solve the problem that I have in my business today. And then I do that again tomorrow. And I encourage you all, if you listen to the show, to do the same. The third thing is understanding the business. And what I mean by that is you have to understand if you're listening to the show, you're trying to, grow your off-market acquisitions. You are in the business of sales and marketing, not real estate investing. That's the operations part, not, AI, not software, sales and marketing. And if 90% of your time is not going to getting better at those 2 things, you're playing the wrong game, right? So what does that look like? Practicality and reality, kind of rhymed. What that looks like is all of your effort on the acquisition side is how can I get more leads in the door at a great return on ad spend? And how can I maximize my sales process and sales team? If you go that route, you will make a lot of money. If you try to tinker with AI tools and software and all that kind of stuff day in and day out, you're going to suffer. You're going to be in a very bad place. And the last one is risk tolerance, right? This one's a little more cut and dry. The people who crush it and get there quickly tend to make bets, meaning if they're getting a 5x return on a marketing channel, they triple their ad spend. If they meet someone who's a rock star they want to hire but that needs a big base salary, they pay it. If they need to learn something, they write a check. Educated bets based on data is what gets you to where you want to go. And people that get there quickly are constantly pushing themselves. And I'll call out Brandon again. And sorry, Brandon, if you listen to this, but Brandon and I had a one-on-one earlier 2025. And he was asking me how to continue to grow. This year he wants to do $1 million. He wants to double his revenue to $1.5 million. And I said, well, let's look at your data. And most of you guys don't do that enough. You don't really sit there and you aren't objective and really honest with yourselves. And you don't open up and really look at your P&L and, really look at your QuickBooks and really look at your KPIs and say, how much money am I actually making? What is my data actually telling me? If you just really did that once a week, you sat down and really just asked yourself that you're honest. And if you don't track this stuff, you have to. You don't track this stuff, there's nothing else you need from the show. Go track this stuff. And ask yourself very honestly, what am I making from my business? Profit-wise, what does my P&L say? What do my KPIs say? And then make bets based on those, right? If you after a year of two marketing channels, if one's giving you a 5x return and one's giving you a 2x return, why wouldn't you allocate more money in the channel that's giving you a 5x, at least until you break it? And by break it, I mean now it's a 3x. They're just questions you have to ask yourself. If I put it this way, I actually heard this week on a podcast where business is a lot like you're in a dark room. There's piles of shit all over the floor. And somewhere in that room is a pile of gold. And so you're walking around, stumbling around in the dark room, and you're picking up piles of shit all day. And you go, oh, there's another pile of shit. There's another pile of shit. There's another pile of shit. Eventually, by process of elimination, you find the pot of gold. But you might have picked up 50 piles of shit over 3 years. When you look at your data, when you get honest with your business, when you actually look at what your business is telling you, it's like walking through that room, but with a flashlight. And the more clear you are in your data, the more clear you are on your finances, the brighter that flashlight is. And yeah, you might still trip over some shit. You might still make some mistakes and pick up some shit, but you're going to find that gold a lot quicker. I think it's a very simple, very funny, very kind of, I guess, different analogy to this. But if you are not really measuring and tracking your KPIs, your data, and you're not looking at your finances and sitting down going, hey, Cole, whatever your name is, hey, let's look in the mirror. What's actually happening in my business? You're doing yourself a massive disservice and you are not operating at a level that you could be and should be. So those are the couple core things I want you guys to take from today's show is as you are now in the new year, focus on return on brain damage. Okay. You don't need to be the vanity metric person. If it's flashy on Instagram, it's probably not the way you want to be running your business. Singular focus, right? One asset class, one marketing channel, one exit strategy. If you want to grow, and by exit strategy, I don't mean like, hey, if you're wholesaling, yeah, you can learn novations and you can learn, seller finance and how to wholesale those deals. But I mean, like, generally speaking, you don't need to be the guy that does Section 8 and Airbnb and wholesaling and flipping. And then understand the business. You're in a sales and marketing business, act like it. And a risk tolerance. This one's more cut and dry. But the people who crush it and get there quickly, they make bets. If you're getting a 5x return on a marketing channel, triple the spend, build that flashlight, right? Build that habit of looking around the room with the flashlight, with your data, with your KPIs. If you do those 4 things, you guys, you have a much better 2026. Well, as we outro today's show, I just want to thank you all for listening. A lot of you guys reach out, let me know who you want to hear, what we can talk about. The show has grown just through word of mouth tremendously in the last year. We've doubled our average first week downloads. We've broken a lot of, kind of thresholds for the show that I didn't know if we'd ever build. But we've now officially, this will be the 217th, that's great, the 217th episode of this show since I started this. And when I started this, it was just 10, 12-minute versions of me rambling, a little bit like today. And that's where it really started to take off. And Tucker came on and we put out some great podcasts. We bring clients on all the time, some guests on all the time. But yeah, this is the 217th episode of the show. And if you listen to this, you're not going to find any part of this business that I haven't covered on a previous show or a client case study that hasn't talked about something awesome. So we appreciate you guys. If you listen to the show, we know you're busy. We know there's a lot of things that you could do, a lot of shows you could listen to. And we're glad that you come here and spend your car ride, your jog, whatever it may be, your time at the gym with us at the Easy Button Real Estate Podcast. 2026 is going to be amazing. Stay at it. There's deals happening, guys. There is deals happening. There's money being made. Do not let the internet fool you. Real estate works. It's the beautiful thing about real estate. You have permanent product market fit. Everyone will always be buying and selling homes. That's not your issue. Your issue is probably a skill issue. It's probably sales, probably marketing, probably hiring, probably finances, probably KPIs, probably operations. It's probably not your product or your exit strategy. So that's what I'll leave you with, you guys. As always, a like, a review, a share means the world. We only grow this through organic word of mouth. And until next time, you're only one deal away.